financial literacy, and the human condition. Welcome to Financial Fitness with the Money Doctor, Dr. Francis Rayam.
Hi, it's Francis. I just wanted to take a minute to thank you for watching this video. If you're catching us on YouTube, please help us help others by clicking like, subscribe, and all notifications so you don't miss any videos. And check back for the next video. I think you're going to love it. Thanks again. For more information, you can visit us at hugyourmoney.com.
Welcome to Financial Fitness. I'm Jess Tyler, along with the Money Doctor, Dr. Francis Rayam. Hi.
Hi, Jess. How are you?
I am hanging in there. I will say that.
Yeah. Well, on the other side of a holiday, a lot of people have super stress. And some of that's about money. Some of it's not, right? We all have stories about these crazy things that happen in the middle of our holiday season. But one of them happens to be finance. And, it's great to run around saying, Happy Thanksgiving, happy holidays. But they're not happy to everyone. And
right.
I want to do what we can to maybe alleviate some of that today and to just, talk about the elephant in the room and what we can do about it. So if you're feeling a little hopeless or a little down at the holidays and money has something to do with that, listen to this show because there are things you can do, whether you think so or not. And that's probably the biggest point here is that you may well think that you have done everything possible and you may be sure of yourself and you may have talked to your friends and your family and nobody has anything to offer. But you need to remember that they're not professionals at it. They either don't remember what it was like to not be able to make ends meet, or things have changed and what they know isn't relevant now, or they just don't get it. They just don't know who you are. So they say things to you like, don't forget to save off the top, pay yourself first. For anybody out there who has not been able to, they're counting their pennies like, am I going to get gas or groceries this week?
Yeah, if you haven't had a red strip on the top of your electric bill, then I don't want to hear from you.
Thank you very much, Jess. Exactly. A red strip on the top of your electric bill. So I think we need to talk about what happens. And it's very rare. I want to preface this by saying almost always when people come to us, there is some solution. It may not be the same solution, right? It's not cookie cutter. It's not always here, just put your debt in the system and do this. A lot of times people can't. They're in trouble. They're up to debt in their, to their eyeballs. Or recently I had a case where a woman had filed a bankruptcy before coming to me. So I didn't have that as an escape route for her. But when she filed the bankruptcy, her credit card debt was discharged, but her student loans weren't, her mortgage wasn't, her car loan wasn't.
So it's easy to get right back into the same situation.
Well, she never got out of the situation. The sad part about this is if we had looked at this first, we would have seen the problem together. We would have seen, if you file this bankruptcy, here's how much money in monthly payments will be discharged. Let's look at your expenses. Oh, this is a problem because even after you discharge that, you still have too much in expenses for your income. And you no longer have credit because you just filed a bankruptcy. I'm sorry for laughing at this because it's not funny, but to me, it's just so avoidable. It's so avoidable.
And I'm sure people don't factor in too that after you file a bankruptcy, any loan you go to get for the next 7 years, you're going to be paying more, right? If you're even able to get one.
Well, yeah. Well, so let's get rid of that scare tactic first.
Okay.
That people have this fear about filing bankruptcy. I won't be able to get a loan for 7 years. That's not true. You will need to rebuild your credit, and you will be able to get a loan if you rebuild your credit within a relatively reasonable period of time. I estimate a year and a half to get a car loan if we're actively working on repairing your credit, a year to a year and a half to get a car loan, maybe 3 to 4 to get a mortgage. Okay.
Oh, that's better than I thought.
Yeah, you have to be proactive about it. You have to do the work to rebuild your credit. And we have all these little tricks of the trade to do. For example, don't go out and apply for a credit card and get declined and then say, oh, gee, I'll try again, because that decline has gone on your credit report. It would be better to talk to us and find out which credit card am I going to get approved for. And it doesn't, by the way, here's a hint, it doesn't have to be a secured credit card.
Okay.
So there's just one little thing. If you thought you knew how to rebuild your credit after bankruptcy. And the only way to do it was to get a secured credit card. And thank you for playing. You're wrong. There are more things you can do. Okay.
Mhm.
So the point about all of this is that it is never hopeless. All right.
Okay.
It might mean that you have to make some short-term sacrifices. The other thing that might have to happen is a long-term solution. And you might not like it, but you know what? You're not going to like being homeless either. And if you really have, and now I'm speaking to people who have been, I'm going to say good with their money, or at least, and people might be shaking their heads like, good with their money? Well, how do they have no money if they're good with it? Either
Mhm.
they've been diligent and tried to reduce their budget as much as they can and not make poor decisions, or they just have gotten into this position because of, let's say, a divorce, or they're perhaps widowed.
Mhm.
Something has happened that they've lost their income. Even, people who have income coming in because they're raising children, and when those children turn 18 or 22 or whatever the divorce decree might say, that income stops. I know when you start taking that income for children, you say, I'm not ever going to use it. It's only for my
Mhm.
kids. But you know what? Life happens to people. And the thing I take exception to mostly, I think, is the attack on people who have fallen into some sort of financial peril, as
Mhm.
if they were all just haphazardly just, buying sweaters and
Right.
bonbons and
Big screen
going to
TVs.
expensive
Yeah.
concerts. Are there people who do that? Of course, there are people who
Mhm.
spend money like the old phrase was a drunken sailor, There are people who spend money carelessly and end
Yeah.
up in a bad place. But there are more people, in my experience, at least the ones we talked to, who really didn't do that, but who have
Mhm.
ended up in a place where they just think they can't make ends meet. Now,
Yeah.
a lot of the times that's true. But let's suppose that it's not true, right? You think you can't make ends meet. You come to us, we find some solution. Sometimes it's putting them in the standard hug your money plan where we pay off that debt really quickly, track their expenses, and help them with retirement planning. Sometimes it's about reorganizing
Mhm.
very carefully. Here's another thing you can do really badly. You can consolidate your debt, not know the outcome, and end up shooting yourself in the foot because now you have a new consolidation loan with one
Yep.
big payment that you have to make every month. You never pay off those little pieces quickly like we do. You never get any breathing room. And, you would think, Jess, that bankruptcy attorneys and bankers would see this coming and they wouldn't advise you to do these things. But it
Mhm.
just isn't true. They don't have, it's not their job and they don't have
Right.
those tools. If you go to a bankruptcy attorney, they ask you to build this little budget. It's
Mhm.
it's hysterical if you really want to look at it. I mean, how much do you spend in groceries? I mean, it's all estimates.
Yeah.
And, there's nothing in there like that's really specific. Like, let's track your expenses for a month, 2 months, 3 months, and see what you're really spending, right?
Mhm. Yeah.
So, you know, you can really get yourself in trouble if you don't do this well. And I know we have some questions to get to too, but which we can do in the second half. And I'll also give you some ideas of things that you can do that are short-term fixes and long-term fixes. Even if you have done everything you already can, your budget is trimmed to the bone, you don't think there's anything left to do, there's still hope.
All right. Well, we're going to get to questions in the second half. Um, actually, pause here for a second. We're only at 9 minutes. Do you still want to go here for a little bit?
Oh, yes. I'm sorry. I got the wrong,
That's
I
okay.
do. I got
I
the
can
wrong
edit this
time in
little
my
part out.
head. I knew
Okay.
that seemed fast. Okay.
Yeah.
So yes. Yeah. So go ahead.
I did have a quick question. It's kind of a little sidebar, as we do sometimes. Why is it legal, or this is a legal question, I guess. So you can just give me your guess. I just don't think it's fair that if you apply for a credit card and get turned down, they can deduct on your credit score. It makes you not want to apply for anything ever.
Yeah. Yeah. I'll agree with you on that. I think that's not great. I understand why it happens, but I would prefer that they just put the denial on your credit report like an inquiry and
Hmm.
didn't affect your score, right?
Yeah.
Instead of saying, look, but you have to understand just that credit scores, FICO, Fair and Isaac, the two guys that developed this lovely system. Yeah, thank you very much, Fair and
Hmm.
Isaac. Credit scores are designed as a means to assess risk for lenders. So a lender is able to look at your number rather
Hmm.
than read your report and say, well, they're a good risk, they're a bad risk, they're a great risk, whatever. So when a company looks at your credit and declines you, other companies want to see that as if there's been a little research done, right?
Mhm.
So they say, oh, so and so declined you. Oh, I see that your score dropped. Okay, well, we don't like you now because your score is 579 instead of 620 or whatever, right? It's not fair necessarily, because very often a decline is because of something that is erroneous on your credit report, or something they didn't understand, or maybe they had different criterion than somebody else will have in order to lend to you. So,
Yeah, I totally understand. I totally understand any company having the right to deny you. Absolutely, they do if they think you're a bad risk. But
sure.
then to get dinged on top of it just seems a little aggressive.
Yeah, it's rubbing salt in an open wound a little bit,
Yeah.
right? You're
Yeah.
denied, and we're going to zing you for it. Yeah, so you know what my advice is always here is, the first thing you do is you don't just apply. You pull your credit reports. I always recommend annualcreditreport.com, directly through the credit reporting bureaus. Pull all three of them and scrutinize them. Go right through. They're pretty easy to read. They seem a little scary at first, but there's instructions there. Go right down the line and see, okay, this isn't necessarily accurate. I don't remember ever being late on that. And dispute it, because it's free to dispute these things. And you can dispute them right there online. Then wait 30 to 45 days, pull them again, see if your credit's cleaned up, then go and apply.
Okay.
Okay, so yeah,
Good
don't,
advice.
otherwise you really do cause yourself more of a problem
Can
than you
you
want.
find out from some of these companies, like say you were trying to apply for a specific visa, is there a way to call the company and find out what credit score do you normally accept? Is it normally like a
Sure.
650, a 680, whatever, so you know kind of ahead of time?
Yeah, I love to do that. That's a lot of what we teach people, is how to figure out how to play the game and then use that to your advantage. And so, yes, you can call. Now, you'll probably have to get a supervisor, and you'll spend a little time on the phone. And the way to ask, I'm going to give this to you here. Here's my free tip of the day. You
Okay.
don't say, what credit score do you need for me to be approved? Because they won't be able to answer it.
Okay.
What you say is, hypothetically, if I were to apply and I had, let's say, a 620 credit score, would that mean possible approval for me? Or do you require something else?
Okay.
And you need to remember that the people talking to you on the phone are either being listened to, or they might be in a facility where other people hear them. So they're probably not going to go, no, you need 720, you know.
Right.
But you can learn a lot about that. But you probably will have to get past the front line to do it. But it's worth doing. It's really worth doing.
Yeah, definitely, because then you know whether to apply or not, whether your credit score is going to get dinged or not.
Yes. Yeah. So I love that you ask questions like that, because you're a regular person, right? And you have and not a financial geek. But they're important questions, and I know you have some other questions too. And I do want to talk in the second half about things that you can do if you've already trimmed your budget as much as you can trim it, and you think there's nothing else to do. What's left?
And I just want to do a little plug here really quick that if you are out doing your Christmas shopping now, your book would be a great present if you're a
Oh,
parent and have kids and want to
oh.
give them a little advice. If you are getting ready to retire, let everybody know about the book and where you can get it. I think it'd be a great gift for anybody.
Thank you, Jess. I have to say that was a complete surprise. I didn't know you were going to do that. Very nice. That's very nice. Yes, it's Retire Debt and Retire Well. Not Retire Debt or Retire Well. Retire Debt and Retire Well. And you can get it at Amazon.com.
All right. And where can they get a hold of you on the phone?
Sure, 413-773-3333.
And hugyourmoney.com is the place to go. We've got questions coming up in the second half of Financial Fitness. Hang tight. We'll be back with the Money Doctor, Dr. Francis Ram, right here on WHMP.
Financial Fitness with the Money Doctor is underwritten by Franklin County Technical School. We build futures. Visit fcts.us or call 413-863-9561.
Welcome back to Financial Fitness. I'm Jess Tyler, along with the Money Doctor, Dr. Francis Ram. Hi.
Hi, Jess. Thanks for hanging in there with me. Okay.
Yeah, we're talking about it being a little overwhelming this time of year. It is for a lot of people.
It is for a lot of people. And as we talked about, if you're having financial, difficulties, it comes with more baggage at this time of year, I think, when people are trying to, bring food to somebody else's house or buy presents, and money is really tight. It can really be excruciating. And I say that firsthand. I know I've told this story on the air, and I won't go into it today, but I remember many holidays that were very bad, but I remember one Christmas in particular where I was so ashamed and so embarrassed, and I just couldn't afford to do anything. And I I didn't want to go to my family's house for Christmas. Uh, and love prevailed, and they called me and dragged me down there, and I had a lovely Christmas, but not without a lot of tears. And I was really feeling awful about it, and
Yeah.
just at the willies again of thinking about it. Um, so I want to talk to people who maybe are really struggling and who are feeling it more at the holidays even,
Hmm.
that it is not hopeless. I know you might feel that way, but it is not hopeless. Um, so let's talk about some things you can do. I want to leave time for our questions too, but let's talk about some things you can do. So first thing you can do is you can contact a pro and really go through your expenses, not just your hard costs, but how much do you spend on, I don't know, co-pays or birthday gifts or, coffee. I mean, it doesn't have to be, you don't have to feel penalized, that you can't spend this money. But the hardest thing to do is to address this accurately.
Hmm.
Instead, what people tend to do is what I call cherry picking. Oh, this money thing's really got me. I guess I'm just not going to eat out anymore. Or I'm
Hmm.
going to trim my cell phone bill. I'm going to cut my streaming. And they cut as much as they can, thinking, okay, that's the solution, but still without a bottom line number, a
Right.
real bottom line number. So when we do the hug your budget thing and you put all your expenses in there, we really see the bottom line. And that's what's so important, no matter how you do this, is to identify how short you really are on, in my case, 5 feet. So how short you really are, what kind of deficit you're running on every month. And then you can address it. It will be a little painful, but not
Yeah.
as bad as continuing to beat your head against the brick wall, right?
Right.
Because that's what makes it so hard is that you don't have a solution and you keep doing it. Okay, short-term things you can do. You can either trim your expenses or you can increase your income. Now, if you've already trimmed everything you can trim, and even if you've seen a pro like us and we've trimmed everything and it's still just staring us in the face that you
Yeah.
have to increase your income and you're working 50, 60 hours a week already, what are you going to do about that? So,
Hmm.
some short-term things. I know you won't like this, but you could consider a roommate. You could put
Hmm.
somebody in for rent in a room. Doesn't have to be a separate apartment. Maybe they rent a room from you for a short period of time, like maybe a traveling nurse or a teacher who's, only here for one semester or something like that, just to get you kind of over that hurdle. You don't have to go full Airbnb with this thing, okay?
Hmm. Yeah.
Try something like that and see how that might work for you. There are other income streams. Like at this time of year, we see the signs up that say Christmas light installation, or, UPS is looking for drivers, or something like that. You could take in some alterations, whatever. It doesn't have to be a lot, but once you identify your deficit, then you can go about trying to fix that, right? You
Hmm.
say, gee, I'm
Yeah.
running $300 upside down every month. I'm going to fix that. Okay. Long-term things, you can file for other benefits like heating assistance, housing, food stamps, anything that you might qualify for. Maybe the VA, if you're a veteran, might have
Hmm.
some things to assist you. So think about that. But in terms of like a side hustle, even those small things like things we talked about will really help. A lot of people are driving people to medical appointments these days and getting paid to do
Hmm.
that. Um, I know there are some huge companies that offer to do driving things, and some of them pay well and some of them don't. So be
Right.
very careful about that. But I know people will say, well, I want passive income. I don't want to have to work actively for it. But
Hmm.
passive income often means that you have to sort of start up a business, like a vending machine business or something that makes money while you sleep. So be careful about that, particularly if you're already, running on a deficit. Be careful about investing more money in the hopes that you're going to get out of it with this passive income. Start
Okay.
first with the active stuff, get yourself on your feet. So I hope this helps, but I will help anybody who wants to talk to us about this, of course. And I promise to leave room for questions. So shoot, you got questions.
Well, one actually ties right into that. I'm going to skip ahead to that one. Is about an ADU that they're approved now, but the initial investment to get it ready to be able to rent would be about 25 grand. Is it worth it to do that? You're not probably going to see a return on that for, I don't know, depending on how much you charge for rent.
Yeah.
So they want to know whether that's a good investment or not.
It depends on how they do it.
Hmm.
So, yeah, and how long they're going to rent. The math might say, look, we're going to recoup this in a year at $2,000 a month or whatever, right? And so that's worth
Hmm.
doing. But the practical math might not work. How are they going to do that? Do they have the money to do it? So that would be a place where I would say, let's look at the whole picture and let's
Hmm.
juggle some things to see if we can get this to happen maybe without increasing your monthly outlay at all by
Okay.
doing some creative financing. But yeah, I think anything that will increase your income long term, if you're willing to do it, might be worth some investment. You just have to be careful um, not to harm yourself doing it. Yeah.
Okay. Michael D. from Amherst wants small business advice. He wants to start a small business selling food, but can't afford the local business rents unless he moves to a rural area. He sometimes sells food at local farmers markets, but wants a more permanent presence in a downtown area. Do you have any advice for him? What could he do about the rent? He's worried about losing money in his first 2 years. What
Yep.
would be the major pitfalls?
Well, he's smart. Restaurant
Okay.
businesses are one of the top businesses that fail. The first pitfall I would say is do the gut check. Does he want, and this is so common, not just in the restaurant business, but in lots of businesses, is he in love with the idea of having a store, of having a restaurant or a storefront where people come in and he's got brick and mortar? Is he in love with that idea, or is he really thinking that there's a reason he has to have this storefront in order to uh, advance his business? And would it, in fact, increase his profits by enough to cover that rent? Some advice I would give to him is to check the local community development center in his area. These are
Okay.
people who have great resources, often free, usually inexpensive. They help you with things like business plans. The one here in Franklin County has a kitchen. I mean, that like who's it? Michael's Pickles, somebody's famous pickles is done in. And when the Four Leaf Clover was open, they did their barbecue sauce and all of that. It's an entire registered kitchen that you can
Oh, that's
provide
great.
stuff from.
Yeah.
Yeah, another thing might be that he might be able to work out some deal with a place like an Elks or a Moose or a Lodge that has a kitchen that isn't necessarily being used often, but
Oh, that's a good idea.
they already have the kitchen and they might be willing to let
Yeah.
him use that, maybe even use it to provide food for their patrons at a cut rate. So there, I mean, obviously I'm just touching the tip of the iceberg here, but
Hmm.
people ask these very direct questions like, will I be able to pay the rent or not? And my mind immediately goes to, well, let's tip that on its side and figure out whether it's the right thing for you or not, and how creative can we get about it? Well, I could go on for an hour about that easy, but let's go to the next question. I hope that's helpful to Michael, though.
All right. Sammy from Northampton wants to help her two daughters with college expenses, but doesn't know what the strategy should be. Should she give her daughters a credit card with a strict limit? Should she co-sign loans? She owns a small home, worked hard to save money with her husband, wants to avoid incurring too much debt as she approaches retirement.
Yeah, well, great question. So yes, you want to teach your kids by example.
Hmm.
Should you co-sign loans? No, you shouldn't co-sign loans. I hate co-signing loans, but you will get boxed into it anyway because the kids can only get so much money as a freshman, sophomore, junior for student loans, and the rest of it falls on the parents. So I would
Hmm.
love to tell you don't co-sign the loans, but you will probably get stuck co-signing some loans. However, don't co-sign things you don't need to. Okay.
Okay.
Then the credit card with a limit or so. Yeah, I like that idea. I would almost rather, though, that it was a debit card tied to a separate account with a credit card logo on it. So if they need a credit card, they can use it as a Visa or MasterCard, but the money is
Hmm.
actually coming out of the account. It isn't going onto a credit card that has to maybe get paid at the end of the month. They will still be able to learn how to use that money. If you want them to build credit and you don't want to give them a credit card, put them on as an additional user on your card.
I was just going to mention this because this is one of the tips from you that I've held on to since we started the show. Was
Oh,
what a
really?
great idea this is. Yeah.
Oh, thanks. Well, so then you pay your bill on time. They're going to get credit. Don't give them the card.
Right.
Just when the card comes in, don't give it to them, but go ahead and pay that bill and build some credit for them so that they have something when they get out of school. But instead of just handing them credit blindly, teach them along the way to use money wisely by putting a finite amount of money in that account. It can only get recharged when it needs to. They have to come to you and say, I spent all my money. What did you spend it on? This is a learning process. This is a wonderful question, and I'm so glad that she sees it the way she does about not getting herself into trouble as she's approaching retirement as well.
Hmm.
And probably the best gift she can give her kids is to teach them along the way through example like that. Yeah, great
Okay,
question.
great. All right, that was Sammy. Angie from Greenfield, we get this question a lot. Wants to know when it makes sense to buy, finance, or lease a car. Does it ever make sense to lease? She has an aging Buick, the 2011, but isn't sure if buying makes sense given her very tight budget. She's got a family with a kid and a pending separation.
Mm.
Makes around 60,000 a year.
Hmm. Well, the
Pretty
pending
specific,
separation
yeah.
is Yeah, the pending separation is the first thing that makes my eyebrows go up because I'm wondering if she's scrambling like, what happens if I get divorced? How will I be able to get a car? So I have to do it now, right? Sometimes people do that. I would
Hmm.
caution her to talk to her attorney about this. If she hasn't gotten an attorney already, at least get a free consult. I know it's hard to face, but what happens if we things don't work out for us? Where am I financially? Will I be able to buy a car or not? Not that they'll look at her money, but they'll tell her what the ins and outs are, how that gets divided if the worst happens for her. Does it make sense to lease a car? Yeah, but I actually have a two-part video on this that's clients
Oh,
see it in our membership dashboard. But it makes sense to lease a car, in my opinion, either when you're in our program already, and I can see that we're going to pay off quite a bit of debt in the next 3 years, and
okay.
that we're going to prepare to be able to buy that car out in 3 years.
Hmm.
That's the best way to do it, to win the game that way, and then not to lease too much car. In other words, don't lease more car than you could have bought. So if you could buy a $30,000 car and the payment is, at whatever, $500 a month, but you can lease it for $250 a month, let's lease it for now and then
Hmm.
buy it out at the end, but only inside the program when we're paying off debt. The problem with leases is you never get rid of that car payment. And
Yeah.
so people will just trade in one lease for another, but it keeps going up, 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 up. Now, some people say, well, that's okay because I want to drive a new car. Uh, Fine if you can afford it, but this woman is on a reasonably limited income and facing possible financial, disaster. I hate to say disaster, struggles maybe.
Troubles. Yes. Yeah.
Yeah, troubles. So the other place it makes sense to use a lease is if it's deductible for your business in some way, if your business needs to lease a vehicle. That's a question for an accountant. I would almost prefer, if she will call me, that we talk about whether to buy new or used and how to make that work within her budget, so that she doesn't have that, hey, what am I going to do in 3 years from now, given her personal life at the moment. Yeah. And I
Yeah.
do want her to talk to an attorney. Yeah.
Another, I know we're going to run out of time, but another piece of advice you gave that I remembered, which I thought was great, was that you could buy a used car, but go to the bank and find out what year they cut off that you can get the longest loan for. I
Yeah.
thought
The
that was
sweet
great
spot.
advice.
The
Yes.
sweet spot. Yeah. That's why I said if she'll call me, I'll go through that with her. Yeah. Yeah.
All right.
Great.
Perfect. It looks like we're going to be out of time, but before we go, I want to let everybody know that sent in a question. You will get a copy of the book, Retire Debt and Retire Well. If you want to send a question in and we use it on the air, you'll get a copy of the book. And you can send those to jtyler@whmp.com or to hugyourmoney.com. You'll get those. And if we use it, yeah, you get the book.
Thanks, Jess. Yeah.
Be
Happy
a nice
holidays.
re-gift for Christmas, by the way.
Yeah. I know we'll talk again, but in case somebody doesn't catch the show between now and the holidays, really wishing everybody a happy holiday season. And if money is worrying you, please just call us. It's so addressable. No matter how bad you think it is, don't let
Mhm.
yourself walk around feeling badly at the holidays or
And
anytime.
what phone number can they reach you at?
Thanks, Jess. They can reach us at 413-773-3333.
And you can always go to hugyourmoney.com. Happy holidays to you too. I'm sure I'll talk to you before then, but thank you so much. We'll be back again next week, right?
We will.
Ano-
Thanks, Jess.
Another edition of Financial Fitness with the Money Doctor, Dr. Francis Ram, right here on WHMP.
Financial Fitness with the Money Doctor is underwritten by Hug Your Money. So unique, it's patented. Financial coaching and more information at hugyourmoney.com.